Let's talk about China and Bitcoin, a relationship so volatile it's almost legendary in the crypto world. Every time you think things have settled, something new stirs the pot, and the entire market holds its breath. It's become the crypto world's favorite recurring nightmare. Traders everywhere brace themselves for the next wave of uncertainty, knowing that a single headline can send prices tumbling or soaring in minutes. Every few months, headlines scream, "China bans Bitcoin again!" and panic sweeps through the market. It's almost like clockwork. Just when things seem calm, the rumor mill starts churning. This time, rumors claimed China would ban not just trading or mining, but even personal ownership of Bitcoin. Imagine the shock. People wondered if simply holding a few satoshis could land them in trouble. Social media exploded, influencers posted dramatic charts, and news outlets ran with unverified stories. The echo chamber grew louder, with everyone speculating about what might happen next. The panic was instant. People started selling, convinced the end was near. Exchanges saw a surge in sell orders, and prices dipped as fear took over logic. But here's the truth. These rumors thrive on vague sources and a lack of official information. Most of the time, it's just hearsay, repeated until it feels real. No government announcements, no new laws, just digital whispers amplified into hysteria. The official channels remain silent, but the rumor mill never sleeps. It's classic FUD, fear, uncertainty, and doubt, designed to manipulate markets and make people act rashly. The more confusion, the easier it is for big players to profit from the chaos. The confusion isn't accidental, it's the point. When people are scared, they make mistakes, and someone somewhere is ready to take advantage. In crypto, if it sounds like a panic, it's probably meant to create one. The cycle repeats, and those who don't learn from it get caught every time. Lesson 1. Always question the narrative before you hit the sell button. Take a breath, check the facts, and remember that not every headline is the whole story. Don't let rumors dictate your moves. In the world of crypto, staying calm and informed is your best defense against the endless wall of rumors. Why do these rumors stick? Why does every new headline about China and Bitcoin seem to send shockwaves through the crypto world, even before the facts are clear? The answer lies in China's long, dramatic, and often unpredictable history with cryptocurrency. A saga marked by escalating crackdowns, sudden policy shifts, and a constant tug-of-war between innovation and control. It all began in 2013, when China's central bank issued its first major warning, banning financial institutions from handling Bitcoin transactions. But interestingly, individuals were still allowed to own and trade Bitcoin privately, creating a gray area that fueled both curiosity and confusion. Fast forward to 2017, and the government's stance hardened. They banned initial coin offerings, ICOs, and forced the closure of all domestic cryptocurrency exchanges. This move didn't kill the industry. Instead, it pushed crypto activity underground or overseas, as Chinese entrepreneurs and traders found new ways to participate in the global market. Then, in 2021, the crackdown reached a new level. Authorities targeted Bitcoin mining, citing environmental concerns and financial risks. Massive mining operations were shut down almost overnight, and miners scrambled to relocate their equipment to friendlier countries, dramatically shifting the global mining landscape. Each government action was more severe than the last, reinforcing the image of a state determined to control every aspect of its financial system. The message was clear. When it comes to money, the government wants the final say. So when a new rumor surfaces, no matter how small, it fits perfectly into this established pattern. People have come to expect that the next step could be a total ban on individual ownership or even harsher measures. The world's financial markets are primed to react. The government's unpredictable actions have conditioned investors and observers to brace for the worst, often before any official announcement is made. In this environment, FUD, fear, uncertainty, and doubt, spreads like wildfire. A single tweet or unverified news report can trigger panic selling, wild speculation, and global market swings within minutes. China's crackdown history provides the perfect backdrop for every new wave of fear, making each rumor feel plausible, no matter how extreme. The narrative is set. China as the strict enforcer, the villain in the eyes of crypto enthusiasts, and cryptocurrency as the rebellious underdog fighting for survival and freedom. That's why, every time a new story breaks, the world is always ready to believe that the next sweeping ban is just around the corner, no matter how many times the cycle repeats. The stage is always set for another act in this ongoing drama, with the world watching and waiting for what China will do next. So, what did the latest rumors claim? Let's break down exactly what was being said and how it all started, because in the world of crypto, even a whisper can turn into a tidal wave of speculation. The rumor was that China was preparing to make it illegal for its citizens to own any form of cryptocurrency, not just to trade or mine it, but to actually possess it in any way, shape, or form. If true, this would be a massive escalation. Previous crackdowns in China focused on shutting down crypto exchanges and banning mining operations, but they never went so far as to criminalize personal ownership. This new claim suggested a much more severe approach, one that could impact millions of ordinary people. But where did this story come from? The source was nothing more than a handful of anonymous posts on Chinese social media platforms. These posts were vague, lacking any concrete evidence or official documentation, yet they quickly caught the attention of Western crypto news outlets. Soon headlines were everywhere, boldly declaring China to ban crypto ownership. The problem? The original sources were unverified, and the details were murky at best. But that didn't stop the story from spreading like wildfire. The news tapped into existing anxieties about government control and surveillance, especially in a country known for its strict regulations. Social media algorithms amplified the panic, and soon everyone was talking about it. China's notoriously opaque political system only made things worse. With so little transparency, rumors can easily fill the gaps left by official silence, creating an environment where misinformation thrives. The result? A perfect storm for market manipulation. Prices swung wildly as traders reacted to the supposed news, and billions of dollars changed hands in a matter of hours. Yet, despite all the noise, there were no official statements from Chinese authorities, no new laws, no press releases, just a feedback loop of fear and uncertainty. In the world of crypto, a single rumor, no matter how flimsy, can move entire markets and wipe out fortunes overnight. The lesson here is simple, but crucial. Always check the source before you believe the hype. Don't take headlines at face value, especially when the stakes are this high. Don't let a whisper become your reality. In a world full of noise, be the one who seeks the truth. Here's the reality. No Chinese law explicitly bans individuals from owning cryptocurrencies. The government has made trading and mining nearly impossible, but personal ownership is treated as virtual property. Chinese courts have even ruled that Bitcoin is protected as private property. This legal nuance is crucial. While the state cracks down on crypto businesses, it hasn't criminalized holding digital assets. The government wants control, not chaos. Banning ownership outright would be a logistical nightmare. So, millions of Chinese citizens still legally own crypto. The rumors of an ownership ban ignore this legal reality. The government's stance is restrictive, but not absolute. Don't confuse tough regulation with total prohibition. The facts are more nuanced than the headlines. When the rumors hit, the crypto market reacted instantly. Bitcoin's price plunged, billions vanished in hours. This is the China FUD discount, a predictable cycle of panic selling every time negative news emerges. Newcomers see disaster, veterans see opportunity. As panic subsides, analysts point out the lack of evidence and the market begins to recover. Savvy investors buy the dip, stabilizing prices. Within days, much of the loss is erased. This cycle, panic, dip, debunking, recovery, shows how sentiment drives crypto as much as fundamentals. The technology never changed, only the story did. In crypto, information is as powerful as code. Don't let fear dictate your trades. The market's volatility is fueled by rumors, not reality. Stay skeptical, stay smart. To understand China's hostility to Bitcoin, look at what it's building, the digital yuan. This is a central bank digital currency, fully centralized, issued by the People's Bank of China. Every transaction is trackable, giving the government unprecedented control. They can monitor, restrict, or even program how money is spent. Bitcoin, by contrast, is decentralized and permissionless, a direct threat to state control. For China, Bitcoin isn't just risky, it's a rival ideology. The crackdown on crypto is about eliminating competition for the digital yuan. China wants its citizens using state-sanctioned digital money, not a borderless alternative. This is a battle between centralized power and decentralized freedom. The digital yuan is China's answer to the crypto revolution. Control is the endgame. Here's the paradox. China bans crypto but loves blockchain. President Xi has called blockchain a core technology, sparking massive state investment. But China's vision is for private, permissioned blockchains. Centralized, controlled, and closed. They want the benefits of blockchain without the decentralization of Bitcoin. It's like using the internet, but only if you control every website. State enterprises launch blockchain projects while police shut down crypto trading. This isn't contradiction, it's strategy. China wants to lead in blockchain tech, but on its own terms. Their blockchain with Chinese characteristics is about control, not freedom. Don't mistake blockchain enthusiasm for crypto acceptance. Do China's crackdowns actually hurt Bitcoin? History says no, they make it stronger. The 2021 mining ban forced miners to relocate, making the network more decentralized and resilient. Trading bans pushed activity underground or overseas but didn't stop it. China's actions are like squeezing a balloon. The pressure just moves elsewhere. No single country can kill Bitcoin. The network adapts and survives. The more China cracks down, the more innovation and capital flow to friendlier places. Short-term volatility, yes. Long-term damage? Not really. China's loss is often another country's gain. The rumors and bans shift activity but don't end it. Bitcoin's global, decentralized nature is its greatest defense. The network keeps running, no matter what. China can't stop the signal. What's the takeaway? The crypto news cycle thrives on rumors and fear. Headlines grab attention, not always the truth. The recent China ban panic was based on hearsay, not law. Always be skeptical. Do your own research before reacting. China's crypto policy is about control, not technology. They embrace blockchain but only on their terms. Bitcoin's resilience is proven. It survives every attack and adapts. No single government can ban it globally. The next China FUD story is inevitable. Don't fall for it. The future of finance is being built now, and it won't be smooth. Question everything. Trust the fundamentals, and don't let panic drive your decisions. In crypto, facts matter more than fear.